let's turn now to our next panelist, is Basant Kaur. She is the Managing Director and Chief Operating Officer in India for C2FO. For those of you who don't know C2FO, and we've got their slides here, C2FO is one of the world's largest providers of working capital or advanced financing for companies working in a number of areas. I'll let Basant tell you more about the very interesting story of C2FO, which was I will reveal that it was founded by a traditional banker, but a traditional banker that realized some years ago that traditional ways of banking weren't going to work in this context, and he's built a very impressive platform that Basant is a very important representative of today. So Basant, over to you.
Thank you, Matt. Good morning, everybody. Great to be here today. So as Matt said, C2FO is the world's largest platform for working capital. Our mission, quite simply, is to provide low-cost, convenient capital to every business in the world that needs it to grow, right? And one of the themes that we've touched on already is that crises are great, represent great opportunities, and that is indeed true for C2FO as well. We were founded in 2008 on the heels of the great financial crisis, where we found that small and medium-sized enterprises really struggled to get access to working capital on a mass scale. And what was interesting at that time, and which continues to hold true today as well, is that a lot of these SMEs have accounts receivables from highly rated corporates, right? And when you consider the corresponding accounts payable that sits on large corporate balance sheets, this combination creates a really powerful risk-free asset, right? So, where banks with their opaque and, sometimes long-winded credit underwriting processes were unable to service the working capital needs of these SMEs, what C2FO has been able to do is fill that space and create an award-winning platform that eliminates credit risk altogether by matching the accounts payable and accounts receivables across millions of businesses and creating a really nice, transparent, frictionless way for these businesses to access capital when they need it, and more importantly, at the price point that they're comfortable with. And the numbers that you see on the slide are really a testament to the impact that C2FO has made over the years. Businesses have today accelerated over $200 billion worth of accounts receivable through C2FO. And, we're expecting this number to touch $1 trillion over the next few years. We have today over 1.75 million businesses in network across 160 odd countries. On a daily basis, we load about 43 million invoices. And in Q1 of this year alone, we matched over $500 billion worth of accounts payable and receivable. So let me stop there. And
that's pretty powerful numbers. I mean, now just to be challenging to you and the panel for later, I mean, we're talking, that's $500 billion so far this year. That's great. I've been at meetings on trade and supply chain finance where it's been estimated that somewhere north of, I've heard figures like 15 trillion, 19 trillion about money that's tied up in these accounts receivable and payable at any given time. So that's great progress. Still leaves a huge amount of work to do, and probably, many of those smaller firms in poorer country markets are still ones that whether it's in APEC or other places, still need a lot of thought. And that's definitely something we want to touch on with the panel and get your thoughts about how we can continue to expand things. But just so you don't think that we're only about Asia here, and well, Chris talked about Africa, so I'm sorry, we're not just about Asia. We're not just about the East. I want to bring the Americas in because we're very privileged to also have our good friend and another SME Finance Forum member, eFactor Network, represented by its chief, Hector de la Garcia. And Hector de la Garza, I'm so sorry, Hector, my apologies. my my reading is failing me at this hour, but eFactor grew up in Mexico, focusing, but it's now becoming not only a regional power in Latin America, but it's reaching out to Europe and other parts of the world. So Hector, tell us a little bit more about eFactor Network. And
thank you very much. First of all, thank you, Matt, for inviting us in order to share our experience and also to hear this great experience for this from these companies. Well, eFactor was founded in 2009. We have been trading since that date, and our first trading activity was import factoring. We do supply chain finance since the inceptions, and our first customer is going to be, for example, was Motorola selling to Axtel, a Mexican corporation, and it was one of the digital operations in Mexico for import. So we replaced a lot of credit in order to do supply chain finance with this company, big corporation with a big supplier, and it was a good trade of $5 billion. And so $5 million at that time, 2009, our first trade in a moment of crisis where US dollars in Mexico were limited because of the situation in the world at that time. So since that date, we have grown, and last year we traded, we just not processed. We traded $5 billion in transactions, in amount of credit in three currencies, pesos, US dollars, and euros. And today we are trading in over 28 countries, with suppliers in 28 countries, corporations in 8 countries. Now we expanded overseas besides Mexico. And we have over 40 financial institutions. We are very proud to have a very robust funding portfolio, where the IFC now is additional to be part of our shareholders since 2018. They fund in our platform, as well as the Inter-American Development Bank, Bladex, Bancomex, and now FIRA. Those are multilateral banks that are focused on development and to have impact on access to liquidity and SMEs. But also we have 35 banks coming from overseas in Mexico, banks like Credit Agricole or Comerica Bank, Bank of America, Banorte here in Mexico, BBVA, among others. And with this marketplace, we try to match the requirements and to democratize the access to liquidity for SMEs. 96% of our marketplace is trading with the SMEs. So we have traded over 20,000 companies worldwide. And of course, when a big corporation on the supply chain finance model confirms the invoice, then we can democratize the access to liquidity for SMEs. So that's our biggest purpose, to provide access for all these SMEs, and of course, big suppliers that can also use these credit lines from these banks in order to make liquid their invoices. And through digital methods, since we started in 2009, we make this operation very efficient. So today we are using different fintech activities in order to use all this information that we have, all this history of trading, and working with data analytics. We are now providing funding to certain SMEs in order to multiply this unlock of cash using supply chain finance. So we, in our next stage, we are looking to calculate in a very precise manner the traceability or the trace of the money with the multiplication of the money. For those who are economists, the multiplier of economics of liquidity. When you provide access to one SME, that SME pay to their suppliers as well. So the money goes and provides a big impact to the whole economy, and also for the employees that they work, that they have in Thailand. So we are very happy of being a member of SME and to have this invitation and the opportunity to share this activity that we have in Mexico. And I'm going to conclude with this example. Today we can confirm an invoice here in Mexico with a Mexican risk, with a French bank, with a supplier in Italy, with euros as a currency in one transaction, and provide the liquidity in 24 hours. So, or the same day if the currency and the bank allows it. But it's a great method that provides added value to all the participants in the marketplace, and that's why eFactor has grown in time. So thank you very much.
That's a great story, Hector. And you know, Mexico is a country where the government had invested relatively early in it. It was interested in accounts receivable and the payment system in general. And through the National Development Bank, NAFINSA, and others, it helped to kind of kickstart this market. But could you explain a little bit more about, from a enabling environment point of view, what more did you build on top of that? What helped you to grow eFactor? And now that you're doing this in so many countries, what are the key conditions for making that extension, whether it's to France or to other Latin American countries or Spain or wherever, so that you can do that instantaneous transacting and financing?
Yes. Thank you very much for asking that, Matt. I had the fortune to work at NAFIN and other banks in the past or prior to start up this company. And NAFIN provided a good way to deploy funds, but the limitation to provide funds only in Mexico and funded by Mexican banks limited a lot of the activity for the big corporations. So the big opportunity there was to provide access to liquidity to suppliers, Mexican suppliers first, that provided goods and services to big corporations invoiced in US dollars. So a lot of imports from these suppliers are associated to the FX and Forex rate, right? So they have to invoice in US dollars, but the buyer didn't have this product in US dollars in a competitive price. And the access, of course. So bringing on into a multi-bank, multi-currency platform from foreign banks and local banks provided a very good portfolio of funding for these big corporations in a very competitive price. So having IFC, IDB, Bladex, Bancomex, and BBVA, Banorte, we can provide rates at a price of LIBOR plus 1.5 to the suppliers, right? Small and big, LIBOR plus 3. So these are very competitive rate, or TIE plus 1, TIE plus 2, because we provided, we opened through a switch model of funding of the resources for the different suppliers of these big corporations in a very competitive price. So not only for Mexican suppliers, but also to finance suppliers overseas. So big corporations have strategic suppliers that are in Asia, Europe, US, that also requires to unlock this cash for payments at a very good price, right? Mm-hmm. So today we have an office in Spain, an office in South America in order to support countries over there for the corporations, and in the US. So we are now dealing with treasurers in the US, Spain, and South America in order to deploy supply chain finance and replicate our model overseas.
So you're very much echoing what Basant was saying about, there's not a lot of risk here. It's a matter of connecting the buying and the selling And then when you can see those strong and regular relationships, you can make bridges. But it's as you're doing this across borders. Let me go back to you, Basant. I know you're focusing on India, but as you're working on India's relationship with countries around the world, what are the critical factors that help you to make those bridges across markets? And what are some of the issues that you have to overcome to help C2FO and others expand in this field? Because clearly the opportunity is there, but and there must be some roadblocks that we should draw attention to in this gathering.
So actually, Matt, the way I would put it is that the beauty of the C2FO product is its simplicity, right? The fact that what you're really doing is matching the accounts receivable to the accounts payable. So even for a MSME sat in India, and if you're able to match their accounts receivable to a buyer that they may have supplied to overseas, and we're able to match that receivable, that becomes an opportunity for us to provide that liquidity to the supplier. So I think that the C2FO model is actually, its simplicity lends itself to its extensibility in that sense, right? And allows us to today cover, I think we settle in about 46 currencies already globally, and with an ability to service about 71. So that's really what's allowed us to scale to the numbers that we have.
And of course, just so we don't step over the obvious here, we're also talking about these contracts in all these different markets are things that are able to be concluded digitally. And there still are in the APEC region and elsewhere countries where those sort of digital agreements are not considered valid in contracting, and that while you can do this in Mexico and India and other places, there still are places where wet signatures are making us go back in what as you're rightly describing is an area where the sky's the limit in how much demand there is and how readily, if the platforms could be extended, it could be resolved. But it requires, I'm correct, right, Basant, that it requires all this being digitalized, ideally from the get-go, or at least a quick way to convert it from paper documents to digital.
That is correct. So as long as there is a digital record of this accounts payable and accounts receivable, and we're able to match it, that's what enables us to create that market for the buyer and the seller on the platform. But having said that, and I think you touched on that in India, we do have a big push, from the government that is digitizing invoicing in totality, right? Where today the government has mandated that all businesses over $3 million effectively, must do e-invoicing. So that has actually opened up even more opportunities for platforms such as ours. And just if I can give you a sense of numbers, just a couple of years ago, we'd done this survey and looked at that the working capital gap or requirement rather for SMEs in India was about $450 billion. There's roughly about 60 to 70 million SMEs in India. And we found that—
And 450 billion in India translates to probably 10 times that in any other market, because everything costs less in India. So that's a multi-trillion-dollar figure in the rest of the world.
Absolutely. And less than 10% of it was financed by banks, right? So it's a huge opportunity in India alone, and even in that context.
And it's great that you're bringing in the investment that the government of India, we're going to have, for those, just a spoiler alert, we're going to have a representative of the Monetary Authority of Singapore later. If you didn't read the program, we're going to talk about their investment in the APEC region. But India is another place where the government proactively decided to invest in a critical core infrastructure, including common contracts, digital payments, digital record keeping now of trading. And I'm sure, Ravi, that's also affecting your work and how you're able to build both domestically and internationally on India Factoring's work.
No, exactly what I'll echo what Basant already said, that there is a huge enabler from the government, the regulators, and I'll also bring in the point which Hector made it earlier from the NAFIN. In fact, the genesis of the India's e-system build-up, I credit it to the NAFIN, because if you recollect, in India there is a system called Trade Receivable Discounting System, which has been launched, which is actually based on the NAFIN model. So the government has licensed 3 operators, that is the exchanges, to enable the finance for the SMEs, MSMEs, through the receivables financing program, where the buyers and sellers are brought onto the exchange along with the financiers like us, and they are able to finance and at the best of the rates. So that's the credit from the NAFIN model, which has been incorporated. Further to that, that was for the domestic receivables part. Now there is a new initiative even for the international trade. The same thing is being replicated by the government of India, giving out 4 licenses to the similar exchanges to set up the international financing programs. And that brings out the entire new ambit, because as you rightly mentioned, different regulations, different geographies bring into different complexities also. So all those things is that there is a regulatory push, and that's where till there is a central bank of India's push or any regulator's push, the things do not progress well. And likewise for the e-agreements and e-KYC AI spaces, that's an important aspect also, which is now recognized by the government of India and the regulators across India, in enabling that culture where the wet signatures are no longer required. You can have e-signatures, including on the documentation, entire documentation, and the KYCs also is e-generated. So that's a huge push from the regulators, which is predominant requirement for the private sectors to rely upon.
Very, very good. And I wonder, Chris, you're new to the APEC region, but you've been having to work across so many different country markets in Africa, for example. What are you making of this discussion? What are you seeing that were the same, that fits in with your experience about what is enabling being able to set up these digital platforms, and what are the sort of things that are still questions in your mind as you contemplate going into the APEC region?
Yeah. So, back in 2019, right before the pandemic, we did some trips over to Singapore and did some research about moving into the region. Wasn't a great decision to launch in the region right during the pandemic, so we've been holding off, but are excited to do so now. The biggest difference is the maturity of the banking sector from Southeast Asia to Africa, both in terms of digitization and product offerings. But the similarities that we see, one of the biggest challenges is there is a lot of progress made on invoice discounting, factoring. Once a receivable is created, I think there's still a tremendous amount of room to leverage technology to help SMEs create those invoices. And this is around things like goods in transit, pre-manufacturing finance, and connecting the entire chain. Organizations like C2FO, obviously with the scale that they've achieved, have incredible amounts of data and leverage, as an example, right, to start to move up that value chain. And I think as you connect markets like Africa and Southeast Asia with the trade triangle that's most likely going to be the most active trade triangle for the next 50 years, you'd be able to figure all these pieces out and really start to connect buyers and sellers through SMEs into a unified data stream.
That's a really important point, that it's, and it was something that goes back to some of our opening remarks from Kun Virapong. It's not just about getting the financing to the SME. It's about building that wider ecosystem that the SMEs operate in, so that the trade data is there, the business has access to digital tools where its own data can be digitalized and shared in a responsible way. And if that can all be put into place effectively, then there's huge opportunity to grow and to bring and to really move up the chains, because we still, for all that we've been talking about, there still is limited penetration beyond the first and second tier suppliers. Although I know, Alvin, that's very much why the motivation behind Air 8, that you really want to move much further along the chains and get the much smaller businesses in here. And I know that you're using that very platform strategy that to digitalize the whole system to do that. What are you seeing as the main things that are helping you? whether in APEC or anywhere else? And what are some of the remaining challenges as you try to build the Air8 platform out to more markets and more SMEs?
Sure. Thanks, Matt. Maybe I'll just share an anecdote from the China market itself, because we've seen a lot of very innovative breakthroughs, right, in the supply chain finance space in China, all right, and pretty much led by some of the fintech platforms out there. And I think this is particularly relevant for some of the industries like ours, right, especially in the apparel and the general merchandise industry. Say, for example, Matt, you mentioned about the tier 1 and tier 2 suppliers being served, but not necessarily the tier 3, tier 4, and so on and so forth. So in China itself, we see a growing popularity of what we call deep tiered financing, all right, whereby pretty much we are leveraging on blockchain technologies to tokenize the account payables of what we call the anchor buyers, so the big brand names, and then pretty much using those tokenized or account payables to use it as a form of settlement between the suppliers. So essentially, all right, it's actually a reverse factoring solution, but one that is actually able to penetrate deep into the supply chain of the industry vertical itself. And this is something which we are piloting, all right, for the apparel industry, because in the apparel industry, you have multiple tiers and all the way down to even the raw materials, whereby we are talking about the cotton mills and the factories and so on and so forth. Now, these are the guys, right, that might not necessarily have access to funding at a sustainable cost itself. So by doing so, by leveraging on the credit grade of these anchor buyers, you are then able to allow and enable these guys to, get funding at a much lower cost. Again, I think this is all again in line with the inclusive financing policies of many markets out there, all right, especially for the emerging markets. China, India, and various Southeast Asian markets. So I think this is one big trend which we have observed. Secondly, because we are very focused on the cross-border trade finance transactions, I think we all know that within the cross-border space, right, there is a greater lack of transparency and trust between the buyers and the sellers itself. So for that, now we have seen various markets in APEC, right? For example, in Hong Kong, in China, we are actually launching platforms like, for example, in Hong Kong, we call it E-Trade Connect. It's a government-led initiative led by HKMA and all, right? Pretty much to place all these invoices and purchase orders on the ledger itself, right, on the blockchain ledger itself. And likewise, even the private sector players, like my previous employer, N Financial, we actually brought out things like Trustable, all right, which is really to enable trust, all right, between the buyer and seller, again by placing information on the ledger itself, and also by introducing things like payment guarantees on the ledger, right, on the blockchain ledger itself. So I will say that all these are fantastic, all right, in terms of pushing forth, all right, in terms of enabling greater trust and transparency, and thereby allowing the exporters to get access to more funding and all these things. At the same time, the take-up adoption of such platforms are quite, I would say that at this stage itself is still in infancy stage, right? We do not see a very huge take-up itself. So I think there is still a requirement, necessity for education, for greater awareness across exporters. Because like you rightfully mentioned, I think this also is dependent on the rate of the whole digital transformation of these SMEs. Many of these SMEs, especially in the traditional industry like the apparel and general merchandise industry, right, they are kind of resistant, right? They're kind of like iffy about adopting new technologies or this thing. But we do see that with the pandemic, right, we do see that that has started to change. And he has started to cascade down from the buyers down to the first tier suppliers, second tier suppliers. So I think moving forward, I think it's pretty much the responsibility of our platforms like ours and many of the participants out here, all right, to really help and enable these SMEs to quicken or accelerate this whole technology adoption, to digitize the trade finance supply chain. And then that will actually allow for what we just mentioned, the adoption of electronic documentations and validation, eKYC and all these things, so that to accelerate the whole global trade supply chain finance. Yeah.
it's great to hear all this, and it's very interesting that you started out talking about how we've learned from China, and many of you have talked about the potential of technologies like blockchain here, as did our opening speakers. To what extent, we haven't talked about central bank digital currencies, and China happens to be a market where the government has been very open-minded and has actually encouraged retail level work with central bank digital currencies. What effect has this had on the sort of things you're talking about now? And to what extent would central bank digital currencies across APEC have an effect on the ability to grow these platforms?
Excellent question. If I may, right, 2 cents worth.
Sure.
So I think the ERMB or ECNY being rolled out in 2019 has been a trailblazer, all right, in terms of the whole cryptocurrency, or rather the national bank cryptocurrency itself. And the thing is that right now it's actually in the pilot stage. Or I say in the pilot stage, right? Pretty much limited to the B2C space, all right, for the retail space itself. But we do see, a very relevant kind of application to, first and foremost, the cross-border payments. Now, cross-border payments relying on cryptocurrency, that has actually been ongoing since the Ripple days, right? So Ripple back in 2015, I think working with various banks, they have actually established this cross-border payment infrastructure based on blockchain technology itself. Moving forward, I think the ECNY launched by the Chinese government and PBOC, People's Bank of China, all right, does have a potential, right, to help accelerate the whole adoption of cryptocurrency, all right, for these cross-border payments. But we do believe that you'll be limited to those backed by the central banks itself, all right? So I think as we understand, they've been actually working with the various central banks at MAS and HKMA, all right, in order to facilitate that. Now, how that applies back to this global supply chain finance? Very interesting question here, all right? And this is something where I think various private institutions and financial institutions have actually been, giving feedbacks to the government, all right, in terms of the adoption, all right, for such, ERMB, all right, for this digital trade finance, all right. So, but I always say that it will be a function of the regulations, all right, of the participating markets for such cross-border settlement itself, because therein still lies in a lot of, policies surrounding FX, surrounding, the cross-border currency flows and all this thing. So I would say that will probably be in the mid future, all right, maybe 2-3 years from now. But in the meantime, I think probably they start off with the cross-border payments. Then we talk about the cross-border trade finance.
Anyone else want to weigh in on the central bank digital currencies and how they could affect this situation? And by the way, audience, look, I'm having a great time talking with all these fantastic panelists, but I'm looking for questions from you in the chat, and I'm not seeing any yet. So please don't be shy. There are like 90, 100 of you listening in, as far as I can tell, and I hope some of you must have questions. So please type them in. We won't have time to ask you to open your mic, but I'm looking for those typed questions, and we will take them up in the 15 minutes or 11 minutes that remain for us. So anyone else want to talk about digital currencies, or are there other issues that we should be putting on the table here?
I just have a quick comment on that. I think
Chris.
given the news, over the last couple of weeks, and everyone's efforts to replicate some version of a digital currency on ramp and off ramp in the crypto world, I think it's really important for this infrastructure to flourish that formal CBDC gets more involved. Having proxy clearly didn't work, but the infrastructure is there. And so now that the rails are there, and it's just a matter of kind of plugging in what is effectively a government promissory note into this infrastructure, will certainly help scale this capability. And I think it's really important in emerging economies where the question of whether the dollars are there, or the underlying hard currency is there is a real question. CBDC will help prove that out and really help with capital flows cross border.
Interesting. And yeah, I like your point about the basic rails are there, but some of the endpoints like the exchanges are showing, and some of the speculated currencies themselves are showing vulnerability. So to make this something that governments are going to be comfortable with, really, it seems like the central banks taking more active roles here is going to be very important, and looking to digital. What does it look like to you, Hector, in Latin America with regard to the effect that digital currencies from the central banks might have on the sort of work you're doing?
Sorry. As we work in our platform, in our marketplace, corporations pays in different currencies. And at the end, our customer or marketplace is enabled, of course, by the funding by banks or self-funding of the big corporations. Once they begin to use digital currencies in order to fund these transactions or to pay to the suppliers, we will trade any currency, right? That is legal.
But does that mean, that's a very interesting point, but does that mean that, because some of you were talking, Basant was talking about you're mainly using non-bank money as a primary, and then others like Alvin and you are getting a lot of banks in, but if the central bank currencies go digital, is that potentially the death knell for the banks, for needing the banks as intermediaries in this process? Does it just suddenly be you can go directly to the companies and the capital markets to finance these things, or will banks still play an important role?
Well,
Ravi, you're owned by a bank. What do you think?
Yeah, exactly. So what we're talking about, I'll just use an analogy like what we are talking about today, sustainable, fuel. From that point of view, we are possibly 10, 15 years away. So I would say that even from a digital currency point of view, I would say that at least we are 10 to 15 years away. Yes, there is a beginning, but till the regulations are sketchy, very sketchy, till the regulations around it, the AML concerns and whatnot are laid out so clear, we have a long way to make progress ahead. Some economies are taking a step ahead, but I think most of the economies are a little apprehensive how it will lead to, where it will lead to, especially coming, the compliance is a huge element for bank, non-bank, and even other stakeholders in today's situation. So that aspect, till those situations are addressed, I think we have some way to go ahead yet.
Okay. So we've got our first audience question. I'm so happy, from Adriana, and she's asking, are you all open to partnerships with other financiers, whether they're fintech companies, non-banks, whatever, within your platforms, or do you depend on your own capital? Who wants to? In Basant, you've already described a bit about how C2FO handles this, but maybe you could answer that question in more detail.
Sure, absolutely. So Matt, as you said that, we do rely primarily on corporate balance sheets to fund these transactions, but at the same time, we have evolved to also allow banks to participate in order to facilitate this liquidity to SMEs. So absolutely, yes, we are, and we do partner with banks, NBFCs, other fintech players to be able to offer working capital solutions to SMEs.
So when regulated institutions are considering using your platform to take some, to put some of their lendable capital in, what are the policy considerations from their own regulators they're thinking about when they do that? What are environments where it's easier? What makes it easier for banks and other regulated institutions to participate in your platforms, and what are the factors that may inhibit that?
Sure. So the way that we work is, so we go enterprise first, right? So we are focused on acquiring large enterprise customers, I think similar to what Alvin talked about as well. And these tend to be credits that banks are very comfortable with, right? So typically banks or financial institutions will have a relationship with these large corporate anchors. And then, because these invoices raised by SMEs are against these large corporate anchors, so it becomes a relatively easier transaction for these banks to go ahead and finance. And that's in fact what we have been doing globally now. So in North America, EMEA, and in Asia Pac, we work with banks to facilitate these kinds of transactions. So as long as the corporate is credit worthy enough, we're able to facilitate financing through these other sources.
And there are no issues that are raised. Ravi, I'm thinking of you because RFI is about to meet in Washington, the Global Factors Association, and I know they still have issues with IASB and others about how some of these, as Basant's describing them, they're very safe, secure trades, except not secure, apparently, according to IASB and Basel III. So are there issues that our finance ministers and others should be, and central bankers should be thinking about in APEC about how to facilitate this understanding of what are solid matched assets and how they should be treated so that capital from regulated institutions isn't unduly penalized for moving into these areas and helping out SMEs?
Absolutely, you nailed it. I think there is a number of acronyms or words used for supply chain finance, reverse factoring, and whatnot. So there is a huge amount of discrepancies in the ways and means of functioning of various regulators, various institutions, associations across the world. So there is a huge requirement to make these terms and terminologies, legal obligations, accounting practices uniform across the world. We have seen instances in the past where receivables have been, if they have not been done in a proper manner, they can be pain point also. So it's important to first address the regulatory aspects of the receivables. There needs to be laws and regulations which enable these assignments, as in legal terms, what they call it. From an accounting point of view, the treatment of these receivables and the payables needs to be accordingly treated in the right manner. And that's a huge obligation on the various regulators, associations, and the bodies like UNIDROIT is working towards making it uniform regulations across the world. And these are important aspects which will bring in, make the global world more local, uniform across practices, and bring on parities across the geographies. Our central bank is doing its bit to make these essential. There are capital measures which are there required also. So it's not that in India everything is well placed. There are still a lot of progress required. There are capital measures required to bring these reduced RWA requirements. A lot of things are there, but yes, the progress is at good pace, and next 5 to 7 years I believe, is the way digital finance on supply chain finance factoring is something going to be, unlike a banking finance.
Thanks for raising that. And in the APEC region, the Asia Pacific Financial Forum, or APFF, is very much, I know, involved in these sort of issues about secured transactions reform, and hopefully they're monitoring the people working on that, including some of my IFC colleagues. I know are monitoring the UNIDRA work carefully, so I know they're going to work with JC and others on trying to move this along as consensus is reached in the APEC region as quickly as we can. We have one more question I hope we have time for. We're in our last minute. It's about how e-invoicing developed in India. Maybe if someone could narrowly focus on what the government's done to encourage e-invoicing from a policy point of view, rather than a detailed description of e-invoicing. Basant, you want to have a brief answer to that?
Sure. So the government, I'll keep this short. The government has actually mandated all corporates with a turnover, so revenue in excess of 20 crore INR, which amounts to about let's say about $2.5 to $3 million, to e-invoice. What that means is that when a business sells goods and they issue an invoice, that invoice has to have a barcode or a QR code, which they can get from a system called an invoice IRN number. There's this government system which issues this invoice reference number that has to accompany each invoice that a business issues. And this is now what the government has mandated. So in fact, the threshold for businesses to do this was if you had revenue in excess of $8 million as of last year. This year, the government has brought down the threshold, and we understand that the government is actually probably going to make this mandatory across all businesses, regardless of revenue. This information then, this invoice information actually then flows automatically into tax systems, et cetera, and creates a very nice, transparent chain that can.
And I was gonna ask you, because you've talked about the stick so far, but isn't there also a carrot, especially as we're going to be talking to ministers of finance around APEC, that the digitalization of the goods and services tax, the GST, or VAT in other countries, or sales tax in other countries, hasn't making that automatic been a powerful carrot, because it's taken away an area where, let's be polite here, there was a lot of subjectivity in the way that government officials in India might have behaved to companies. And so, yes, they've been required to do something, but it feeds into an automatic tax compliance system that makes it far less likely that somebody can knock on your door and shake you down by claiming that you've done something that you haven't done.
Absolutely. I couldn't have said it better myself, Matt.
So JC, I see that you're here. It is our time. I wish we could have gone on so much longer, but there's another really great panel that's going to take on many of these issues. And just one quick, for those who can join us in 48 hours time, Alvin was saying that he used to work for a company called Ant Financial. We're going to be bringing them to talk about what they're doing in making financing for SMEs to be more sustainable, a topic that I know we're going to talk about in this next panel. And we're going to talk about Wednesday, Thursday, depending on which side of the Pacific you're on. So with that, let me thank Alvin, Hector, Basant, Chris, and Ravi. You've been terrific. I could have given you each the whole time. You all have so much to share, but I've got to turn back to JC to keep us on schedule and turn over to another really interesting panel, which JC is going to introduce for you. So thanks.